The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss crypto markets is David Nage, is the portfolio manager at Arca. Hi there, David.
How you doing, Michael? Good to be with you.
Great to have you. So I'm just looking at that 20,000 number for Bitcoin. Like, you know, it's above it. We got a bit higher than it. It just seems to be in a pattern right now. You know, every time it gets down closer to 18,000, worries emerge about whether it's going to break down even further. And then when it gets up to 21, maybe there's hope that we'll get out of it. But it really does seem locked. What's your take on the technicals at this point around these numbers?
As I run our venture fund, so I look at a lot of different things from the venture side, from the private side, and obviously from the macro side. As it relates to Bitcoin, what we're seeing right now, as you alluded to in your past guests, is that you're seeing carnage out there. You're seeing Celsius, you're seeing Voyager, you're seeing BlockFi, you're seeing a number of different headlines come in over the last few months, and Bitcoin has held steady around this trading pattern here. And so I think that does speak a lot to its resilience and to the fact that there are investors out there that do have a thesis behind this. We talk about digital assets as a durational, a bet, if you will, in terms of things that are going to happen and change with society and our economic systems. Bitcoin is definitely a part of that. And so, albeit obviously there is incredible volatility in the markets these days, and this is not just with digital assets, this is across the board to public equities as well. We're seeing that Bitcoin is holding itself very well amongst all that volatility. And we think that that is going to continue on. Now, obviously, if it doesn't, if it drops below the technical points that you mentioned, obviously this could further down, and we could see Bitcoin going further down. But again, what I always stress to investors, and I stress this on social media and every kind of conversation I have, is that you really need to have a thesis. Why do you own Bitcoin? What is the purpose for it? What do you believe its durational exposure is going to be in the next 5, 10, 15 years? And I think that's really important in this time and place when there's obviously such extreme volatility and such macro headwinds, really developing your thesis here, why you would have Bitcoin in this market and what you believe that its value in a portfolio and a value in social and economic systems is.
All of that thesis, no doubt, is also connected to the macro outlook, certainly longer term, right? Where does the whole world go with regards to the risks associated with macro markets? At the moment, it's interesting. We've went from this inflation concerns, and that's still supposedly prevalent, but now there's really talk of a recession. Even the price of oil has suddenly collapsed. It looks as if the Fed has done its job, maybe too much, right? What does this part of the cycle mean for how you trade these assets if now we're moving to that sort of environment?
Again, looking from, if I marry the private side and I marry that to the public side, I'm going to quickly go over some numbers here that we see from the private side, which could correlate obviously what's happening in the public side in the next 6, 12, 18 months. From the private side, what we're seeing is we're seeing rounds being done continuously, week over week. We saw over the last week another 36 deals getting done around $810 million. We saw the week before that another 35 deals done around $850 million. And the weeks prior to that, we saw deals on the private side being done totaling over $1 billion, about 50 to 60 deals as well. So we continue to see private markets continue to buoy the markets in general and digital assets. And this is in difference to what we're seeing on the traditional side from some of the larger tech companies that are private right now. We saw Klarna recently get a significant down round, about 1/7 of its value, to $6.5 billion. So we're seeing later stage, more traditional private markets, continue to see havoc. But we're seeing in digital assets, though, is we're seeing some normalization. We're seeing some healthy markets here on the private side. We're seeing rounds that were typically pricing around 35 to 45 million pre-money on the seed rounds this time last year, pricing around 25 and below. We're seeing founders acknowledging and they're watching all of the things that are happening over the last few months in the digital asset markets, and they're taking that into consideration in their rounds. They're changing their round dynamics from what they were doing before, which was SAFs, a simple agreements for future tokens, to SAFEs with potential warrants for tokens in the future when they go decentralized. These are all normal and, in my opinion, healthy things that we're seeing from the private markets, which, as we continue to think about duration, we think if we are in quote unquote, whatever you want to call it today, if you want to call it, a crypto winter, if you want to call it a crypto recession, if you want to call it, a nuclear fallout, whatever you want to call it today, we think, if we look at, from the venture and the private side, what we're seeing today, and we're seeing this market during this downshift, is we're seeing really healthy activity from the private markets, which we think will resound itself in the public markets in the next 6, 12 to 18 months.
So what's interesting is that we have this kind of dangerous cocktail here of a lot of different things that are affecting crypto prices. On the one hand, you have these sort of global macro factors, higher interest rates. And then on the other hand, you have these crypto-specific factors like Terra or Three Arrows or Celsius. As you're kind of looking forward, what do you see as the most important indicators, just as like what might move the price, either causing it to tank further or bring it up? Are you looking more at specific factors within the crypto industry, like the other shoe dropping, so to speak, or are you paying more attention to kind of the global macro landscape?
Well, luckily, I have a little bit of time under my belt where I actually lived during the dot-com bubble, and I actually lived through the Lehman and Bear crisis, and so I know those are very painful events. And so one could equate, obviously, and I think that's been done time and time again, that this is our Lehman moment, this is our dot-com moment. I think if I've seen enough time in digital assets over the last 5 to 6 years, we really haven't had that nuclear fallout. We haven't had that moment in time where there's this absolute havoc, and there's just nothing out there that's complete nuclear bomb being dropped, and we haven't really experienced that yet. We had 2018, obviously, quote unquote crypto winter. We had March of 2020, which was very painful during the height of the pandemic. But we really haven't had that moment where we've had that pets.com moment where everything, all sentiment on the internet was totally negative. We haven't had that moment in terms of Lehman and Bear, where sentiment on the private market, on the financial markets, was at its absolute lowest. We haven't had that. As I said at the beginning, when Michael asked me the question, Bitcoin has actually held up, albeit during bankruptcies, defaults, certain centralized entities, holding off withdrawals. Bitcoin, as one of its benchmarks out there, has held up. So we haven't had that moment of absolute havoc of that nuclear fallout. And maybe we don't, but maybe we do. And so as I said again, as a venture investor, what's really interesting now is that we get to find founders who are looking at what's happened in the markets, and they are cognizant that valuations, from a seller's perspective, founders are obviously selling equity in their company or tokens in their protocols. They can no longer hold the types of valuations that they did last year, and this is healthy. This actually, says to us that founders are acknowledging what's happening in the space. They are building around, really important infrastructure. For instance, we're looking at deals right now that are building new infrastructure like Carta. We don't have a Carta for Web3, where we have a cap table allocation tool where founders and VCs and investors have the ability to have immediate transparency on what they actually hold. We're looking at HR functions for decentralized autonomous organizations or Web3 projects out there that allow those founders and those projects to pay their employees or their contractors in a more immediate Web3 fashion. These are all things that were not part of the last part of the infrastructure build-out. The last part of the infrastructure build-out was focused on wallets and exchanges and a lot of the DeFi primitives out there. What we're seeing today is a real focus on how do you actually build sustainable businesses? How do you provide more transparency on those businesses so investors like us and others out there have the ability to really evaluate them and help them grow into the next phase that we see?
So we can't let you go without sort of spelling out a little bit this disaster movie scenario that you touched upon, because we've actually had other guests on the show, for example, Shark Tank's Kevin O'Leary, who predicted just that, this sort of supernova event that hasn't come yet that could come to the crypto industry. So putting aside the probability of this happening, if we were to have this dramatic effect, this dramatic event that we haven't seen yet, what do you think would trigger it? For example, some people are looking at Tether or USDT. If there was another major shoe to drop, where are the areas that you would be focusing on?
I think it has to do more with the macro and versus just another shoe to drop. As I said, again, we've seen some pretty big shoes drop. over the last few weeks here with, as I said, Celsius, Voyager, BlockFi, CoinFlex, as you mentioned before earlier today. We've seen some pretty big shoes drop, and we've seen some pretty big events happen. I think it's more of a macro effect right now. And that's strange saying that, obviously, coming from more of a Web3 native here, where I spent time in TradeFi. I always thought that leaving TradeFi, I would not have to be thinking about what the Fed was doing as a result. But I think what we're seeing right now, obviously, over the last, few months here, with inflation hitting annualized at 8.6 in May, which was the biggest year-over-year increase since December of 1981, I think what you're seeing right now is a real effect of what Fed policy and central bank policy around the world is doing to investor sentiment. And so as they continue doing that, and as inflation either abates or does not abate, I think that is going to be a very big catalyst for what happens here. I don't know if it's, necessarily, and it's funny to think about being correlated to something that Kevin O'Leary says, but I do think that effectively, we are seeing really, low sentiment right now, I think, from the public side of things. But again, as I said, from the private side of things, we continue to see innovation and we continue to see growth. If I was to kind of think about, what that nuclear fallout would be or what that bomb would be, in a kind of Bruce Willis type of, Die Hard way, I don't think there is one thing that does it, but I do think that what we're seeing right now, and I've equated this to boxing analogy, is that we're in the ring with Mike Tyson in his heydays, in his vintage in 1987. And instead of just getting an uppercut and a jab to the face, we continue to get, these really painful shots to the kidneys and to the stomach and the solar plexus. And we're, trying to see if we can hold on. I think eventually if we get, on a few more of these things, and I think it comes from the macro side of things, if we continue to get a few more of these shots to the solar plexus, I think sentiment will probably reach its lowest peak. And then we'll probably then rebound from that point in time. But I think it's going to be a long time. It's going to be, from a private markets perspective, we're telling all of our founders, really be prepared for more than 2 years, look for 36 months actually. And I think that is prudent. And I think any founders that are building right now should hopefully take that advice.